Jason, welcome everybody. Thank you so much for having me. I'm playing local today. I'm from Buenos Aires, home fine city. I've been away for a while. I'm Nico, CMO of Costos. A little bit of an odd bird from the different feathers. Started as an engineer in C Sharp back in the day. Decided that was very painful. Moved out of it. I can now do marketing, development and tooling and open source. Been working as we were sharing privacy and security for the last 10 years. Findback, worked in that for now in Web3. The Cosmos, if you know, blockchains all one, so what Misha was sharing, we're probably behind it technologically. The Cosmos stack is already hundreds of that layer ones, whether they're public, permissionless, or private and consortiums banking. And today, I'm going to be talking a little bit about the world of capital and how it is changing through stablecoins. It is changing through blockchains that are powering stablecoins, and the roles that stables are playing in business are now growing and going beyond what we know with it. How much, or let's say in the last week, has anybody used stablecoins? Raise their hand a little bit. For sure that 70% of the room, most likely the other 30% has also used stables, and they just don't know about it. Mostly because banking and other industries in finance are starting to use stables to do other things, like settle transactions, settle the transactions for commodities. And it's a symptom of 2025, which has been the year where most of the companies we would have been called crazy, thought they would have gone on chain, are going on chain. BlackRock, Google, Walmart, Stripe, they're all building blockchains, they're building on blockchain, and they're all obsessed about stables. That's not a coincidence. Stable coins and the rails money are evolving, are impacting across multiple categories. But overall, they've been making a debt that's finally meaningful in product market fit in the world of global finance. This chart has been growing steadily despite major crashes, terror or something, and adoption on the enterprise field of both blockchains and stablecoins had only plummeted in the last years, and it's projected, and now plummeted has massively scaled, and it's only projected to continue to grow in the coming years. Stablecoins have been a key unlock for a very simple reason. They're just better across all categories. If you think payments and movement of money, or movement of capital, and settlement after. On all categories, stablecoins or any kind of fiat on-chain beat traditional systems, from days to settle or days to settle cross-border transfers and instant settlement, from cost-free payers entities to multiple actors, point to point, from the credit card issuers that payment and settlers or the receiving banks, to negligible fees, 001, or even zero of the most scenarios. Availability 24/7 versus bank hours. Across each category, stablecoins have suddenly given finance new rails to operate us that are just a passport. And as we said, the impact is clear and simple. It's been the easiest for us to explain why this makes sense when working with banks building their own blockchains and tokenizing assets or trying to tokenize their payments capital. It's just easier to streamline operations, whether you're transferring money from one bank in Hong Kong to a bank in Japan. It's just way cheaper across the border. People say running on ones, running chains, running things on chains is expensive. It is not. You can run small validator networks and have a powerful impact by tokenizing all your customers via event at low costs. And it's programmable. We keep forgetting that basic financial systems is built on 20, 30 years of legacy technology. This technology is patched up together in multiple ways that doesn't allow for complex interactions. Like say, okay, I'm looking for a stock here. I want it paid out today. I want it to settle. There's probably 3, 4, 5 companies involved in that process with different technologies, last banking hours, human hours, email, on-chain. That doesn't matter. You can program the logic of that market itself on the smart contracts, and suddenly all those things, like let's say sending a check or KYCing a new buyer, can be automated. So as soon as there's the input of information, if purchase is being requested, you can automate that process and chain between your transaction and not have to wait for third parties to approve your new user or your bank. All those things just make this new markets, capital markets, on-chain, commodities, referee balls, on-chain, just better. We have examples of this today. You will see it, and probably will hear more of it from other people, like all you today, show up in different shapes and forms. Folks building stablecoins on existing chains. We deal with those that need more control and compliance, so they need their own infrastructure tier ones. I'm going to show two use cases that we've been building in Japan with the biggest consortium of guys over there, called MUT. This includes SBC, Stubo, Swift. These folks have two problems. Japan is one of the world's biggest economy by far. They also have one of the biggest stock markets of the world. But cross-border transfers are still super expensive, so I feel like the hub for addition has a lot of costs. They do a lot of commerce with Hong Kong and Pakistan and Swift, using costs for working with token or ecosystem builders. Great project paths to create a new version of Swift or helping customers change that inventory they received. And suddenly we're just settling transfers of capital between Hong Kong and Japan in seconds, integrated through Swift and existing rails, payment systems or transaction connects that are being used today in your bank, but they're just being now settled between two chains to get into a account. So again, half of the room raise their hands. I don't think there's a lot of administrators here or trade stacks, but all those folks are having their transactions actually settled by stablecoins and on-chain, and they don't even know of it. It's not that you need to open your app, make a transfer through MetaMask. These things and these infrastructure is also useful, whether you just see it on a different market. And commodities, one of the biggest issues that this market has is settlement. There's the system of course, DBP delivery versus payment that helps streamline this. Still, the operations of these markets is very complicated. You do need third parties that can regular DBP. And at the same time, markets operate business on it. So if you're selling tokenized commodities, any type of tokenized security, your market will be limited by that company. With those two problems, Topi, SMBC, and PropBack designed a new system called under the project trading team for a stablecoin-based DBP settlement link. This is a collection of chains that takes the different transactions in this capital market and settles their payment over stablecoins. So you take a commodity, you tokenize it, somebody in the back requests purchase at commodity. The payment is settled on stablecoins, and you go from probably days of processing or waiting for business hours to resume. You just instantly sell it. This is something that this is being applied at scale on Japan because this is really reached them is doing bottoms up work. But we see that as well being used across the world. For those that know projects like On the Finance in the US, offering tokenized stocks now globally, things like treasury bonds from Pingas, we're super in access to. Also to set the link down, items and stablecoin payments for the chip. This is redefining two things. First, the role of money, the role of stablecoins and settling other things than just peer-to-peer payments or transactions. And it's redefining the role of chains. How do we see chains? How do we interact with them, or how we don't? There's now, as Michel was sharing, 35 more public chains than there was out there. There's 30 more that you might not see that are just powering the world and the world of finance that at least today. It's a change for validators as well, as these chains are different, let's say, business relationship with new bank and entities running their private chains, but they still need same services with validation, and they still need to have secure stake in their chains. But now they just powering the system. That's it. Thank you so much for being in this space. Take us up the result.
It's key.
Then maybe reach out to us. You can find us at Tomorrow Means Open Day or across your air online on hospitals.net. Thank you.